you're asking me about the markets today, gold and silver, uh, and they are markets plural. When I say plural, I'm talking about the paper market and the physical market. The paper markets are becoming irrelevant, if you will. I mean, you've got $75 silver in New York, in London, yet you've got 80 plus dollar silver in Shanghai, uh, higher in Japan, higher in UAE, Dubai, all over the world. The physical market is trading above the cash market. I'm sorry, above the futures market, the paper markets. When a spot price trades above the futures price, it's called backwardation. That should never happen because how could an ounce of gold be valued today less in the future than it is today? It can't be because there has to be some time value of money. So that's a very rare occurrence. But what you're having happen now is you've got backwardation between markets themselves. The cash markets are trading above the futures markets, the paper markets, and that's people, investors, buyers. Uh, this is not about stackers. Silver, the big demand is coming from industrial use. But the point I'm trying to make is you have the paper markets and the physical markets separating. If you want to call that backwardation, you can call it backwardation. But what it tells me is that the paper markets in short order are going to become irrelevant.
So when you say that they become irrelevant, how do you see the price for physical being priced in at that point?
It doesn't, everybody's worried about price. Forget about price. The bottom line is, do you own it or do you not? How many ounces do you have? You're going to count your net worth in the future in ounces, not dollars, not yen, not euros. You're going to count your net worth in ounces. So price does not matter because silver is going to go through a failure to deliver. And when that happens, you either own silver and have it or you don't. You're either in or you're out. And if you're out, you'll never be able to get back in. You'll never be able to get in. There won't be physical metal for you to buy with fiat. Fiat is not going to be accepted for physical metal. So don't worry about price. Just get capital out of the system into metal. Metal can't bankrupt. The system is bankrupting.
So, Bill, what do you say to those like myself? I have mining stocks. I've read the book, The Great Taking, or the I should say maybe the white paper, and I do have concerns around that. I know in the past I've held paper certificates before, but I know using the brokerages I have right now that I don't actually own those certificates. I wanted to see if you could just tell us a little bit about that and what the risks are that we have, and ways to secure that, or even your recommendations on holding mining stocks versus physical.
Yeah, I mean there are some very good mining companies out there that you want to be a part owner of, but you want to make sure that when the system goes down, that doesn't get taken out from under you. When you buy a stock in today's world, what happens is that that stock is owned, it's on the books of your broker for your benefit. Now, if the broker gets into trouble and they become insolvent, your shares are on their books. Your shares will go to pay their creditors, and you're out of luck. Same thing with banks. When you put money into a bank, you're no longer legally a depositor. You are a lender, and you're the most subordinate lender there is. So you're only going to you won't get anything, but when the system comes down, it goes tranches. The most senior, the next senior, and then the subordinate is on the very bottom. If there's any crumbs left, you get to fight over those. But there won't be crumbs left. And ask yourself this with a broker: how can these brokers do trades at $7.95, no matter what size? The answer is, and I mean, look at the money that these brokers spend on private jets, limos, big buildings, blah, blah, blah. The overhead is stupid. The way they pay for that is you buy a stock today, you put the money in, by the end of the day, your stock is already lent out. They earn the margin interest on lending your stock out. So the way to protect yourself, get your certificate.
Love it. I think it's great advice. The average person believes that if they have a stock on a brokerage, they own it into their bank account, that they own it and that it's going to be there. So I definitely know there's it's not your money. It's not just sitting there. It's always being lent out. That's how they make their money.
That's the way it used to be until 2014. From 2014 on, the West has been changing the laws, and they're all on the books now. The ink is dry. The West is set up for the great taking.
Can you help the audience just a little bit for those that may not know what the great taking is with just a quick explanation and maybe some of the ideas you have around preparing for it?
Well, first off, it'll only take you an hour to either read it or watch David Rogers Webb do a 1 hour interview talking about it. And basically, I just outlined it. The bottom line is when the system comes down, your assets are going to be used to try to support banks, brokers, insurance companies, financial institutions. Your money is no longer yours. Your money is being held by intermediaries. It's on their books, and when the intermediary fails, you're going to lose your assets. But spend the hour to read or watch The Great Taking.
I definitely recommend it. I'll put links down below for everybody so you guys can go watch that. And as soon as you're finished watching this interview, I'd recommend going to watch that and learning a little bit more about it. So Bill, kind of looking at what's going on recently right now, do we have a systemic risk starting to build as far as being able to acquire physical silver? We've talked about not worrying about the price, but about gathering ounces. If China is starting to, if they're restricting as of January 1st, how much silver leaves out of their country, and we don't have really any big production here in the United States, which leaves us with countries like Canada and Mexico to acquire it from. Do you see a silver squeeze coming in the physical? Do you see a situation where it may become harder to acquire it? And the other thing I'm seeing is that it's getting harder to find product even online from online bullion dealers. They're starting to dry up, and you're having to back order things at this point.
Well, I would ask you to go back and remember what happened in April of 2023 when those 3 banks in California went down on a Thursday or Friday. I was on a short trip. Turned out really not to be a trip because the phone started blowing up. People were scrambling to buy metal, and by Monday morning, no dealers had any metal left in stock. And I mean, we were taking orders with the promise to deliver in 6 weeks. So what I'm getting at is this can happen very quickly, and I'm on the record that this will end up as a failure to deliver, and I believe that will begin, or that will happen first in silver. It'll be followed by gold probably within 24 hours. You mentioned squeeze. Squeeze that looks toward price. So have we been in a squeeze? Yeah, absolutely. The price is going higher. But the danger is that there's more delivery demands than there are ounces in inventory to deliver. And that failure to deliver, COMEX will issue force majeure. They'll pay people in cash. That way they can say, no, we didn't default. But make no mistake, it is a default. If you bought a silver contract with the expectation that you could stand for delivery, get the metal, and you don't get the metal, that's a default. From a technical standpoint, they can legally say it's not a default, but in the real world, that's a default if you don't get your metal.
I know some people that are still sitting on quite a bit of gold that would like to get more silver. Do you think it's too late for people to swap from gold into silver at this point?
Yeah, I think at 55-56 ratio, I think we're in no man's land. When we were in the 70s, 80s, up to 120, I mean, that was a no-brainer. You buy silver, and at a later date, you sell some silver and swap back the gold, and you'll get more ounces than what you would have had you bought the gold outright to begin with. So as the ratio comes down, I've said that I think people need to move in tranches. If you're looking to move X amount of dollars or X amount of percentage of your portfolio, I would do a quarter at 40, 50, a quarter at 40, a quarter at 30 to 1, and then the last quarter you do as a just a gut feel trade. You're not going to be able to pick the bottom, but if you do it in tranches, you can't be wrong and you can't be right, but you'll be better. You'll end up with more gold ounces than you would have if you didn't do that.